Hello, this is going to be a summary of Chapter 3 in the Interpreter's Quick Guide to Self-Employment by Johnson and Boschen. This is the second edition. This is a very helpful book. I hope you'll get it and look through it, but today we're going to go over Chapter 3. In the introduction, you'll find that it reminds you that you've got to be prepared. Okay, as you'll see here, this little emoji comic says, all you need is motivation. False. You need fear and an approaching deadline. So when setting up a business, when considering whether or not to work as a sole proprietor or to go into business as an interpreter, you certainly want to have deadlines and documentation ready to keep track of everything. So taxes are typically the largest expense in your business and the one that requires proactive care to avoid a negative impact on your finances. Handling taxes correctly is equally as important as your actual income. In Chapter 3, we're going to go over the deductions when you're talking about having a business of your own. So Chapter 3 is where we're looking at. What are deductions? Well, deductions are the business-related expenses you paid out of pocket that can be subtracted from your gross income to lower your total taxable income. So, tax-deductible business expenses include certification fees, workshop or conference fees, mileage, and we'll talk more about that in just a minute, home office expenses, and we'll talk about that in just a minute. So you'll need to see the IRS regulations for that, and your home office equipment. So you'll want to see the IRS regulations for that as well. This book was published in 2018, so it's fairly recent. However, as we know, tax laws changes periodically, and so you want to make sure you're very aware of what the current laws and the current tax rates and numbers are. An example to talk about deductions is if you have $40,000 worth of income and $10,000 can be deducted as an expense, then you would only pay tax on the $30,000 remaining. If it were $40,000 and you had a $4,000 deduction expense, then you would pay taxes on the remaining $36,000. Okay. Section 199A, deduction. Tax Cuts and Jobs Act of 2017. This is 20% deduction of the QBI, which is qualified business income. Qualifications: taxable income less than $160,700 if you're single, or less than $321,400 if you're married filing jointly. Now, as the book reminds us, not many interpreters make more than that. So you would have to really look into to see if this is something that you qualify for. More information can be found, according to this book, America's New Tax 2018 Cuts and Jobs Act by Robert Mueller. Make sure you look again at the forms that the IRS has available for you to know what's the most current in your business expenses. Business expense deductions. Okay, so this is where you want to look at the book and look at the different identifications that it shows you regarding what can be deducted if you have a specific business set up. So is something a personal expense or is it a business expense? Only part of your expenses that go directly toward your business are deductible, like certifications or license maintenances. Cell phone, a percentage. If you use your cell phone for business and personal, then probably 50% of it, of the cost of that cell phone, can be deducted. Mileage to and from assignments, and we'll talk about that in just a minute. Car insurance, a percentage of the car insurance, because the car is not solely used for business. Most likely it's shared between personal and business use. Startup costs. Now we'll talk a little bit more about startup costs. So business cards, advertising, what it takes for you to set up your business. Those things may be deductible. But as always, check with a tax professional. Make sure that you do that. Don't go out on your own without checking with a tax professional. The IRS allowances. IRS allowances are startup costs up to $5,000 incurred before the business begins. So this is a portion of the amount of money that you can deduct, and that is startup costs. As I said, advertising, recruiting, training, whatever it takes to get the business started, but up to $5,000. Organizational costs up to $5,000. Certification and licensure fees, business licenses or fees like an LLC or a DBA doing business as, or attorney consultation fees if you're consulting with an attorney to help you get your business set up and to make sure that you're following all of the IRS requirements and the laws for setting up a business, then you can deduct that fee as well. Business asset and capital expenses. Equipment, office furniture, etc., with a lifespan of more than 1 year. So you can't buy something that's not to last more than a year and expect to deduct that cost. So always talk to a tax professional when it comes to that. Business deductions. So car expenses, actual car expenses, and we'll go over the standard mileage method in just a minute, but actual car expenses like gas, oil changes, tolls that you pay for to go on the tollway, repairs to the car, maintenance, lease payments, and insurance. The deduction amount is based on percentage used for business. Never forget that. The total amount of the usage of that vehicle divided in half if your personal and business is divided in half. Registration fees, parking fees, tires, garage rent, but no mileage. On this actual car expense method, you do not deduct mileage. Now, for the standard mileage method, the actual business miles driven times the IRS mileage allowance, which changes frequently. Vehicle registration, only if based on the car's value. Okay. Parking fees, tolls, interest on your car loan. The deduction amount is based on percentage used for the business. Okay, so make sure that you always check that. So here's a big question that everybody always asks. Can I deduct my travel to and from work? Well, here we tell you, without an established home office, like if you're an interpreter in business and you do not have an established home office, your travel from home to your first assignment cannot be deducted. Your travel from your last assignment back home cannot be deducted. However, the travel between assignments can be deducted. Now, if you do have an established home office, then the travel from home to your first assignment can be deducted. Your travel from your last assignment back home can be deducted. The travel in between assignments can be deducted. So there's the difference in whether or not you have an established home office. And we're going to talk about that and what that means and looks like in just a minute also. We'll continue to talk about travel. Out of state interpreting travel. Is it deductible? Yes, it is. It can be for an assignment or a meeting with a client or a business associate about a job, okay, about work, about the business, about interpreting, okay. This must meet the IRS definition of necessary and ordinary. The travel to be deductible must meet the IRS definition of being necessary and ordinary. You want to keep good records of all travel-related expenses. You'll be able to see page 49 through 51. These pages give you very clear definitions and examples of what these deductions are. And then here's a link for you to check the most current IRS publications to give you more help in that direction. Okay, now we're going to talk about home office space requirements. So we'll talk about the home office deductions, regular method, and a simplified method. Exclusively used for conducting business. That's the key term. If you have an office set up in your home that is specifically set aside for doing business in connection with your interpreting business, then it falls under the qualifications for being deductible. You must be able to prove that it is the principal place of business. It must be in a separate dedicated space, must have a desk and a computer. No personal items like a bed or a place for cooking or a theater where you bring people in to watch a movie, or it's specifically set aside for your home office. And here's home office deductions and the two methods. The regular method. Now this is office size divided by the total square feet of the home, and that will equal the percentage of expenses that are deductible. For an example, for a 250 square foot office divided by 2,500 square foot house equals 10% of expenses are deductible. So that's 10% of the home insurance, 10% of the mortgage interest, 10% of the home repairs, depending on the type, 10% of your utilities, 10% of the depreciation. So it's the percentage of the house that the office contains. Okay, that's the regular method. Now the home office deductions on the simplified method, it is the office size in square feet times $5 per square feet allowance. That equals the deduction. So this does not allow for depreciation deduction. The maximum office size for this method is 300 square feet. It's the length times width in feet equals the square footage of the office. The book is very helpful. On page 54 and 55, it has a chart that lines out the simplified and the regular method to determine what is deductible and how much of it is deductible and how you record it in your documentation. Now let's talk about meals. How do you deduct your meals? Well, business-related meals. When I'm meeting with a team interpreter or a client or a vendor, 50% of the meal cost can be deducted. When out of town for business, 50% means the cost can be deducted even if dining alone, because you're out of town on doing business. The only time you can deduct meals when you're alone is when you're out of town on business. So that's chapter 3, and here are some important tips to make sure that you remember. Get a professional to help you set up your taxes well. This is very important. Do it before you begin. Let them tell you exactly what you will need. Most likely that's a CPA, an attorney. Consult with both. You might want to go ahead and hire a CPA. That expense is deductible. You'll want to hire a CPA and let them tell you how to set up your business successfully. Interview several potential professionals and choose the one you find most knowledgeable and affordable for your situation. So you're interviewing them. You're making a decision on what would work best for you and your situation. Establish business logs, tracking software, etc. before you start your business. Documentation, keeping records is crucial. It's the only way that you'll be successful. Make sure to keep all business-related expenses on separate accounts, receipts, etc. for tax purposes. Those are going to be the things that you turn into your CPA or that you provide for your CPA to be able to calculate your taxes. And finally, if you are a contract interpreter, make sure your quarterly taxes are set up clearly before you start your business. Typically, you're going to pay quarterly taxes, not wait till the end of the year, but you'll pay every 3 months. You'll pay towards the IRS towards your taxes. Okay? Any more questions? This is the book to get. Again, it's The Interpreter's Quick Guide to Self-Employment. That was chapter 3. This is written by Rosemary Johnson and Brent Beauchamp. This is the second edition.